Good morning, everyone. I'm Lance, an equity analyst of ABCap, and welcome to Daily Trading Notes. For the U.S. markets, Dow continued its hot streak as investors favor cyclical stocks linked to an economic recovery. Meanwhile, Nasdaq and S&P fell as stay-at-home stocks such as Amazon and Netflix were still dumped. Dow Jones fell 263 points, S&P fell 5 points, while Nasdaq fell 60 points. For our market outlook, optimism has surged on local markets following recent vaccine developments as well as the results of the U.S. elections, while ignoring a worse-than-expected GDP result. The PSAI is likely to test next resistances at 7,100 and 7,200. Following the significant rally, we remain cautious in the short term following the significant gains in the market. Profit-taking may persist as the PSAI has rallied significantly and surpassed pre-lockdown levels. We see a good opportunity to take profits in the short term while accumulating again near 6,700. In other news, PH GDP contracted at a slower pace in the third quarter. The Philippine economy contracted 11.5% year-on-year, which was worse than the 9.6% negative growth median forecast by economists surveyed by Bloomberg. The worst seems to be over as an 8% growth was seen quarter-on-quarter. Weak investments and private consumption continued to be a heavy drag as the Philippines remains to have a large number of active cases. Although there was a significant positive development on the vaccine front, we have yet to see it translate into better economic figures. Also in other news, bad loans hit a 7-year high. The rise in bad loans was expected, with NPLs rising for the straight month in September, surging to the highest level in 7 years. Gross NPLs stood at 3.4%, up from 2.15% a year ago and 2.84% in August, while also recording the highest since the 3.42% in May 2013. Bad loans rose 60% to 364.7 billion pesos as of September. These are loans unpaid for at least 30 days following due date. NPLs are expected to further rise to 4.6% by the end of the year, according to BSP. Despite the expected increase, this is still far off from the 17.6% level we've seen during the Asian financial crisis. Interest rates are relatively lower compared to what it was back in 1997, which helped temper the rise in bad debt. We think NPLs are expected to rise further. And that's it for our market outlook. Have a good day.